Morning, everyone. Sorry for the delay. Uh, just a couple of important things that I had to deal with here before I could open up the room. Okay, it's Rabbit Hole Friday today. So last Friday we were looking at Fibonacci levels. And so this Friday I thought we would kind of continue in the same vein. Fibonacci's, as I mentioned last week, it's funny how they came to be a trading thing, because it's something that occurs in nature, and I guess for some reason somebody thought, hey, let's apply it to the trading realm. Personally, I think it came about because of Charles Dow's habit of splitting the market into thirds. He would routinely wait for a 50% pullback, as well as he would look for 33 and a 66% pullback on a stock. He noticed that the market had these tendencies. And as anybody who's traded fib levels before knows, 33% and 66% retracements are very close to the Fibonacci numbers, where we have 38.2 and 61.8, and then of course they share in common the 50% level. Well, Fibonacci levels, they really have captured a lot of traders' attention, and so now it's to the point where you almost wonder, is it a self-fulfilling prophecy? Are traders randomly buying in at the 62% level or shorting the 62% level? Likewise with the 50% level, and this in turn has actually made Fibonacci levels a phenomenon in the marketplace. Well, traders being who they are, they just could not leave well enough alone, and as a result, not only do we have your regular Fibonacci retracements and extensions, we have time extensions, and even Fibonacci Circle extensions. So I thought this week we would look at the Fibonacci Circle, or sometimes known as Fibonacci arcs, a trading tool a lot of people are not all that familiar with. They look at it and they say, what the heck is that thing? Well, a Fibonacci, let me shrink this up a little bit here so you can see the lines. Here, we'll do it this way. So a Fibonacci circle or Fibonacci arc will take those Fibonacci levels and extend them out. Oh, I see they didn't include a 50% level here. We'll have to add a 50% level. And here we'll make it pretty sky blue. There we go. So the idea is that these are actually hidden support and resistance zones, that other traders aren't aware of these, and therefore you have this edge when it comes to your trading. It's an interesting concept, and like most things trading related, it's funny how often it works until, of course, it doesn't work. The idea behind a Fibonacci circle is that when the market hits these retracement zones, we're going to get some sort of reaction. And depending on whether the reaction is bullish or bearish, we would buy or sell accordingly. Actually, let me show you this on a time-based chart as well, because sometimes a little bit easier to see on a time-based chart. What the? All right, be difficult. So we'll dial this down to, say, like a 5-minute chart. So here is your 5-minute chart now for the NASDAQ. And the idea is that you need to find the high and low in a trend. So there's your Fibonacci circle. Here we go. So you need an obvious swing point on either end. Okay, little itty bitty swing points won't do. You need a substantial peak or valley. When the Fibonacci level is breached and the market closes below there, there's a good indication that the market will continue lower still. And you can see here it breached the 38% level. You could have shorted here. Yes, it pulled back some, but it did try to head lower. Questionable whether or not this is a breach of the 62% zone as it bounced back a little bit. This definitely a close between below the 62% zone, which would indicate that the market will now try to go back to the 100% zone, which it did. So there's a 100% retracement of that circle, not 100% retracement of the move, mind you, but now you are in the 100% circle. Well, actually, I should leave the volume up here. Then we close below that and we move to the next circle, which is 1.38, and then finally out to the final circle, which is, oh, come on. Okay, I don't know what line they made that, probably 1.62. The other way to trade Fibonacci circles is to look for bounces. Now, this could be a little bit more problematic because what you're doing essentially is you're looking for a place for the market to continue the trend. The way that I have a tendency to do these things is I always like the market to exceed a higher low. I treat the initial bar as a signal bar. So just because this bar closed below the 38% retracement, I would not automatically sell on the close or sell on the open of the next bar. Likewise, bounces. So here, the next line, the 62% line, we actually bounced and we closed higher. Well, same thing. I would look for a breach of this. I would treat this as my signal bar rather than just randomly buy a bounce. And you can see if you randomly bought the bounce, well, you would have got stuck on the wrong side. If you, however, used this as your signal bar and made the market go higher, it actually did not follow through. You didn't get any follow through on a sell signal until it occurred right here. Likewise here, you would have to look for a breach, and it didn't come. Here, finally, you got your bounce, if you will, as the market closed back inside the circle. You could have bought above the high. You would have had to do it in the overnight, it looks like, and it actually would have worked out really well for you as the market made that very, very impressive overnight move. All right, I want to show you that on a time-based chart because it's, oh, I should have left that on there. Hold on one sec. One more thing I want to show you. If you're going to follow it on a time-based chart, oop, wrong tool. What's my shortcut? Is it F11? Okay. If you're going to follow it on a time-based chart, it's sometimes helpful to watch your volume as well. So you're looking for indications that the market is going to respect the bounce signal that you get or the break signal that you get by increasing volume. But we can come back to that. Let's see how it works here on the DTS tools. Now, one thing you may have noticed already is that when you retrace a big trend, you sometimes get some really big circles. And this, while they may be a little bit more accurate than the smaller lines, like if we did the trend from here to here, right? This now starts to get a little bit too cozy. So there's going to be a fine line between it. But like I said, ideally, what you're looking for is you're looking for a major swing or a significant swing point, higher and lower, that you can now bracket. Okay, so here we are now. There's got to be a setting here, auto scale. That's odd. I didn't think it would change with the resizing of the chart. Actually, before we get too far with this, let's take a look at the properties. So I've got the auto scale. Oh, maybe I need to lock it. That's probably what I need to do. Show text, so you can keep track of which ring is which, I suppose. Divide time and price separately. Well, let's see what that does. And then just the start times for your circle and so on. And this is where you would go to edit your levels. Okay. Oh, that's different. No doubt this is the time and price. Okay. There we go. Okay, so we now have our circle. We are out by our last line? Almost out to our last line, but we've hit the 1.38 line, and now we would be looking for some sort of bearish reaction. And we can do this also on the other tools, which would be able to incorporate smaller swings, like the eagle swing is very, very large. No, looks like the Raptor already outside of the last zone. So we could eliminate that. Here, let's just go back here to the eagle for a moment. Now it looks like we're making tracks now here to the last last chance really for the sellers to push back. So what we would be looking for is some sort of indication here that the market wants to head lower. It may not be a full on sell signal, but we'll keep an eye maybe on the other tools for a short signal. I don't understand why it keeps trying to resize. All right, here we go. Looks like we're going to hit some resistance around here, around the 73.25-26 zone. And according to the Fibonacci Circle, we should get some sort of reaction there. Oh, look at that. We also happen to have a resistance line, a secondary resistance line at that price. Let's see if we get a saleable signal. If the Raptor comes back now, or the Falcon, perhaps with a short signal. All right, here we go. Okay, here's a warning dot. And what you'd want to see is you'd want to see it close back inside this arc. And so far it's not doing that. Nope, ain't gonna do that. All right. Well, I still have it here on the 5-minute chart, and it seems to be respecting that a little bit better. So maybe this is the type of tool that's not going to work very well on a Renko style bar, which is odd because normally most tools do work very well on Renko style bars. But here on a 5-minute chart, if you retrace that little downtrend from the last couple of days, you can see we breached the first level. So closed above the level, that would be a buy. And so far it's working out very well. We'll stay with this and we'll see whether or not we get a bounce lower now here on the time-based chart. if that's the case, if we're going to get a bounce on the time chart, then we can always, kind of balance the two. We can use the time chart kind of to help discern direction, and then use your DTS tools to help time your entries. When I was looking at this before as a subject for today, I thought it actually showed some promise, which is why I even brought it up. Well, there we go. We're out to the 1.38 line. And it is pushing back. So you could also use these fib arcs as profit targets. You can use them as stop losses. Typically what you do if you were looking for, say, to buy this break, you put your stop loss below the lowest point in the arc before it. So in this case, your stop loss would go below this low if you bought above this high. And then as the market got into the next arc, well, the lowest point in the arc before would be the low of that bar right there. Lowest point of the arc is this bar right here. Lowest point of this arc is, well, I don't know if that's in this arc or below, but either this one or this one right here. Okay, let's see if over the next couple of minutes this bar goes red. Then that would definitely be a bear bar. Look at that. We're getting a number 2 signal here on the Raptor. And there's got to be something about the way the Renko bars are, because it doesn't look like the lines are resizing on a time-based chart. It could be the tool was not designed for a Renko style bar for NinjaTrader. Okay, so here we are now. We're at the outer limits of the bullseye. Let's throw a little bar timer on here, see how much time we have left. Just so we can watch the clock wind down and kind of time our entry a little bit better. I'm going to treat this as a bounce. I'm going to treat this as a bounce, and I'm going to look to short. Oh, look at that. We're already getting a short signal here on the Raptor. And then, of course, if this does turn into a bounce, then we can reverse the Fibonacci arc and use this as a high and use this as a low. Working a trend change signal now on the Falcon. I can see a first micro macro cross there on the Hawk. The Eagle doesn't have a signal just yet. Oh, you guys, if you're going to recover the whole zone, you're not going to leave me anything here. In actual fact, given the band width, we were getting up there a little bit, and we had that number 2 signal. And maybe, you know, if I was a little bit more aggressive, just the fact that we were on that zone might have been a good reason to try to short. So far, it's looking like the market will try to retrace here to the hard edge. We'll see if we get a second push on it. And I will use the low. I will use this as a signal bar. All right, so the bar is complete. I'm going to use the low of this bar now as the entry point. Come on. All right. So I'm going to use the trade calculator just so I have my profit target, and I'll stretch that a little bit. Actually, you know what? Okay, I can leave that there for now. I may actually extend my profit objective and see how it plays out in relation to the fib line, to the fib arc. All right. So there we are. We're short, and we'll see how the market behaves now as it comes down to the fib line, which looks to be 73.14, and after that, just kind of eyeballing it, could go all the way down here to 72.95, 72.94. All right, so we'll get that out of the way for now. So my stop should be above the high in the last arc, which would be up here. All right, so that's a good start. We've breached this arc. If we close below here in the next minute or so, then I can roll my stop above this high right here. And look at that, 72.95 would bring us all the way back here to the median line. That would be a move right down there. All right, so the high of this bar, 73.22 half. Essentially that little swing, that little hiccup right there. All right, only 10 seconds or so left to go, so I'll roll my stop in above the high here. Getting a little bit of a pushback now off the primary resistance line. Funny enough, that how close that is to one of those arcs. That is coincidental, by the way, folks. That wasn't put into the programming. Well, that's a pretty decent little move so far. I don't know if I'd have the patience to run a stop quite this wide. Because don't forget, it's not just the risk amount you have here, which is about $100. It's also all your open profit. So you've got about $150 in open profit plus the $100 at risk. So you're floating about $250. One thing about using fib, whether it's fib levels or fib arcs, and one day we'll look at fib time extensions. But I think it tends to make you a little bit more patient as a trader because you've got your rules. right? You've got your rules for where your stop should be. You've got your rules for where your entries should be. And this now just a little bit of a bullish pushback, which is to be expected. It's probably off of there's probably a trend line that we breached. There we go. So this now the bullish reaction to the trend line break. There would have been nothing wrong with using this arc as a profit objective as well. If you were more in a scalping mood. All right, so now we'll see whether the market can close back below this band and take us down to the next level. Come on. They're thinking about it. Certainly a little bit more activity in today's trading than there was in yesterday. Oh my goodness, yesterday's trading was dismal. All right, so the high of the bar here is 73.18 quarter. I'm going to roll my stop to 17.20. Essentially the high of this green bar. The logic behind it is if this is going to turn out to be a bounce now and the market heads higher, well, I may as well get out above that bar. All right, they're making a bit of a pushback now. A lot of times the judgment call when it comes to trading things like fib levels is: are you going to try to go with trend, or which way is the trend? Are you looking at the the bigger trend, or are you trying to manage these smaller trends that develop? All right, well, there you go. Perhaps I was being too ambitious on that. There was a decent little move out of that. Let's reverse the arc now that we have a fairly bullish and bearish swing. Okay, so according now to the bull swing, this rally up, we closed below the 38% arc. We went lower, like if this was our signal bar, we went lower. And now we're pushing back higher. Oh, man. I'm sorry, folks. I really thought this was going to be a little bit more useful. When I was, like I said, when I was back testing it, I thought, oh, this is kind of a cool tool. I've never really paid that much attention to it. And now I may know why. Well, like I say, fib traders, they start to perhaps see things. All right, let's put that away. And let's look at just a traditional Fibonacci retracement. Now, for me personally, I like to see fib retracements that come all the way back down here, 62% of the prior move. 50% moves, okay, strong markets, you may have to take into account this very, very strong rally bar, and you may consider a 50% retracement enough as an excuse to buy. But what I find most interesting with fib levels are the extensions. Now the 127 is kind of the first extension. A lot of traders will shoot for 138, a 150, and even a 162. But if the market has a tendency to make a 38% or a move back to the 38% level, which would be a 2/3 retracement of the move, then there's a very good chance the market will also try to rally somewhere to the 127 mark. Marcus, who trades fib levels, sent me a couple of emails to show me how he does his. And he does them off of tick charts and stuff, all very interesting. But one point that he made is I never go to the 127 target. I always get out early, just because you don't want to be the last guy waiting. Well, I'm a little disappointed in today's Rabbit Hole Friday. Like I said, I thought it would be a little bit more useful, a little more entertaining. I can't say, unless I'm missing something, somebody's probably going to write me and say, hey, Eric, you bonehead, you're doing it all wrong. That's why your fib circles aren't working. Well, I would appreciate that. I would appreciate the input. So here we go. Just today's session, the low to the high. We've breached. Now we've pulled back inside. Let's see if it comes back with another breach. Maybe we'll try to short it again. I know it seems like I'm in a selling mood lately. What's with that? Two, traders always looking for an edge, always looking at different indicators and stuff, which is part of the whole Rabbit Hole Friday idea. But a lot of traders, when they do their research, especially if you follow trading competitions, you will find that the trading systems that perform the best, bar none, are either breakout systems or moving average systems. So you're looking at something that is following average prices, and when average prices increase or decrease, then you buy or sell accordingly. Well, we're coming back here now with a number one signal here on the Raptor. The Bollinger's not in sync yet. I'm a little confused by the breach here. But maybe the key is to respect the trend. Oh, isn't that a novel idea? So rather than look for the counter trend, look for the market to actually bounce off of one of these fib lines. And I bet you if I put a 50% level in there, I bet you this one bounced right off of the 50%. Hold on. The 38% actually seems a little bit cozy to me, so I'm going to change that to a 50. And look at that. That would have been a little bit more responsive. Ignore the 38, ignore the shorting opportunities. Here we had a very solid bounce on the 50% level. Now I'm liking that. That's something that I think I could work with. Now, the tendency with fib traders is to overpopulate their charts as well. So they start drawing lines like this, and with every little swing, and before you know it, you can't see straight anymore. I think the important thing to do is to recognize, even if you take the high and low of the morning, the market's going to have a tendency one way or the other. So here we are looking at the high and the low of the morning. The trend seems to be up. And so we can look now during these moments of retracement, how is the market responding to these bands? Now that I could see being a little bit more helpful, because I could see if the market retreats now and got back down here to the, let's say it breached the 50%, got here to the 62, just kind of eyeballing it. If I used a traditional fib, that may coincide with a 38% retracement. I don't know. I would have to play with it a little bit more, and I don't know. I'd have to back test it a little bit. I am impressed by this 50% bounce, by it catching that move right there. I was very impressed by the pullback move when we took the initial high and low, or the overnight high and lows, how the market responded to that point right there. And let me refresh your memory. So we got all the way to the second to last circle, and we produced this pin style bar. I think what I would do is I would be a little bit more aggressive on the short. If I saw a reaction like this, a very, very bearish reaction, I think you'd have to be a little bit more aggressive on the shorts. That did coincide, by the way, with the number 2 signal here on the Raptor. So we didn't get in too late, although I did short down here where the number 2 signal was actually already printing around here somewhere. So it may have given me a little bit more confidence to take that number 2 signal. Seeing what I was seeing here on the fib arcs. So here we go again. If we're still considering the overnight, and now we're getting here out to the last zone. If we get another bearish reaction, that would definitely confirm a double top. All right. I think on these reversals, what might be key as well is that you see a breach and you see the market close back inside the arc. If this bar, for instance, um, now that it's in this final zone, if it had closed back below here, I think that would be a very interesting short. Okay. Still a few minutes here on this bar forming, but look at that, we're getting a number 2 signal. And based on what I see here, I'm going to try to short this bad boy. There we go. We're going to take it on this second push that's forming, and I'm going to pull my exit order out of the way. All right, we'll see now whether they get down here to the next fib level again, the fib arc. And just kind of eyeballing that, it looks like it's going to be somewhere around 73, 73.05, 73.06, maybe even 7,300. See, do I have a resistance zone? Oh yeah, there we go. We're still looking maybe for a move back to 72.95. All right, well, that's promising. Maybe I was a little bit too harsh. Maybe I needed to give the arcs a little bit more time to show what they could do. I'll be totally impressed. I'll tell you that if we get down here to 7,300. One thing I have to say that I am kind of surprised on is the reactions at these zones. Traders who use fib arcs often use words like secret support and resistance or hidden support and resistance. And you know what? I'm starting to believe them. Look at the size of this move. And that would really, that really gave me some confidence with that number 2 signal. Otherwise, there was really nothing that special about the number 2 signal. I guess the Bollingers were in sync, and I suppose you could look at this and say, well, it was a bit of a double top, so you definitely had that going for you. We did breach the ATR, so that kind of put things in sync for us as well. So when the circles are getting out here to these extreme points, that seems to exhibit a lot more sensitivity to them. All right, let's see what happens when we get down to the 50% level this time, which looks like it could coincide with the primary resistance line. Still running a very, very wide stop on the trade. Well, I'm not going to call that a pushback yet, although I bet if I put that 38% ring back, it would probably fall right near that bar. Hey, way to go, Ray. Ray said, I missed the if. Sorry. I thought Ray was in on the trade. Ray said, if I was in on that trade, I saw it go down for 5 points. So normally I trade two contracts. I would have bailed out and take the close to $200 profit, which would finish my day. I agree. High probability profit targets are really tough to beat. Take your $100 per trade. You get in, you get out. Think of it as picking their pockets rather than swinging for the fences, going for the home runs. Just get in, get out. Uh, if you ever saw that movie Moneyball with Brad Pitt and Jonah Hill, very interesting movie, especially if you like baseball. And really, who doesn't like baseball? But I wrote an article that actually got picked up by moneyshow.com, and I think I called it What Brad Pitt Taught Me About Trading. If you search it, I'm sure you'll find it. It's on our website as well, or should still be on the website. The essence of the story was how in the movie Moneyball, the Oakland A's turned their dismal baseball team around by not focusing on the players, the big home run hitters, which are all exciting to watch, but they're not the guys that usually win you ball games. Yeah, we all like to, watch the big slugger step up to the plate and try to belt one out of the park, but the guys that win the games are the guys that hit the singles. And that was the essence of the uh, piece that I wrote, was that if you focus on the singles, the home runs will take care of themselves. All right, so here we're now approaching the 50% zone, which looks like, it would be probably a good place to take profit, which would put us at our second high probability target. If we were trading the Eagle, we would be looking for a 10-point move. And coincidentally, that also puts us here in sync with the primary resistance line. We've got a couple minutes left here. Tom says, sorry, Eric, I hate baseball, but it was a fascinating movie. And the other interest is those who like stats. Yes, that's true. There was no shortage of statistics in that. And actually, the movie was well done. Even people who don't follow baseball or understand baseball, I'm sure found it entertaining. Okay, let's see if we get that breach. We have a great minor league team here in Victoria, the Victoria Harbour Cats, and it's fun to go watch the up and coming talent. And you can tell which guys have it, which ones are likely to go onto the majors, or at least have a shot at going on to the majors. But what's fun about a smaller venue like the one in Victoria versus going to see the Mariners in Seattle is you're a lot closer to the umpire. So when you heckle the ump, it's a lot more fun because you know he can hear you. All right, well, we're getting a little bit of a bullish pushback, so I think it's probably prudent here. If I'm not going to take profit, I should at least take my stops to break even. If this turns out to be a bullish pushback off of this 50% level, well, that's going to put us with trend again, isn't it? What would be interesting is if this bullish bar forming as a bit of a bounce bar actually fails, then there's a very good chance the market will continue lower to this next ring. And, well, I'm not going to call it down here to the 100% level, but I think I would be more than happy to take profit as the market approaches the 62% ring. All right, there you have it, boys and girls. Fib arcs or circles. A very interesting concept. I would have to play with it a little bit more, but you know, I was perhaps a little bit harsh early. I could definitely see some potential value in it, and it still surprises me, even after all these years, how the market will respond to these Fibonacci levels. All right, I think we're going to button up shop here for the morning. Have yourselves a wonderful weekend. I will talk to you again on Monday. Now, just a word of warning, I'm moving the office over the weekend. Hopefully, I will have an internet connection come Monday. So if you show up on Monday and let's say we're about 15-20 minutes in and you haven't heard from me, there's a good chance that I got the wires crossed somehow and I couldn't get my internet connection. But hopefully all will go well. But just so you know, if I'm not there right away, then you'll know why. All right. We'll talk to you on Monday then. Have a great weekend. Bye for now.